Hello everyone, this is Nick Perry at Schaefer's Investment Research with your chart slideshow for Friday, June 8th. Today I'm back with my weekly check of the broad market indices. In last week's chart slideshow, we were discussing a bounce. Basically, we had seen this little move here, kind of concealed, but there, and there. Basically, the comp and the rut were bouncing off support. The SPX and the Dow were continuing their runs, and we were trading at or near new high territory. This week, of course, brings us a sell-off. Basically, the SPX, the Dow, the comp, and the rut were all hit. Alright, so let's delve down into the actual indices and start with the SPX. Basically, we do have this pullback here, but it brings the SPX right to its 50-day moving average. That's something to note. I mean, obviously, it did little to help the index back in late February, but we saw the sell-off pretty much end there yesterday, and today we've seen a little bit of a bounce. So, I mean, I would consider that minor support a level to watch. Ultimately, this zone here, coming off this peak, we identified that a while ago, and that's still the level I would keep in mind on the SPX. As far as the Dow goes, it still has a little bit of an air pocket between the current price and the 50-day moving average. We also have an air pocket between the 50-day moving average and that support, so that's something to keep in mind. And no, I'm not trying to draw a little snowman there, though adding that and that would seem to complete the picture, but I digress. Perhaps the most interesting chart to me is the comp. Basically, we've got this little dip here, and it brings the comp right back to the support zone we've been watching, and that's also the site of the 50-day moving average. So basically, we talked about this area down here being congestion. We saw a little bit of a bounce here along this, and we're right back to it. Let me clear off this chart. So basically, I think this is a key level to watch next week. The comp at one point was a leader, not so much a leader anymore, but I still think that people watch it, and I mean it's giving us sort of the most critical test of support. So if we see a breakdown back into this range, down into here, that may give us a warning sign that perhaps the SPX and the Dow are going to move down and test those ranges down in here. The action of the rut is fairly similar to the comp. Basically, we've got a pullback to this support zone, which is this giant consolidation congestion area we've been discussing. So basically, like I said, if you see a breakdown into this, that's not a bearish sign, but it's we may get stuck back in that quagmire there. The rut doesn't tend to get the headline respect that the other indices get, so probably you won't hear too much about a breakdown or a hold at support there. But I think it's worth watching because technically right now we're just sitting at support, so we haven't really even broken down on the rut yet. As far as my overall thoughts on the week go, basically we've seen some selling over the last couple of days, last 3 days, depending on how the day shakes out, maybe 4 days. Hasn't been particularly pleasant, but if you look at these charts here, it's we haven't really seen anything that I would consider a breakdown. Obviously, we had Bill the Bear Gross out last night with some comments that were bearish on bonds, which then was imply that yields would go higher, which offered an alternative to stocks, so it led to stock selling. At least that was how the theory went. So I mean that's out there. Bonds, basically, the 10-year pushing above 5%. That's definitely getting some headlines. So it's something to keep an eye on. But as far as the indices go, we've still got a little bit of selling that could come in, and the charts still wouldn't even look all that bad. So basically, I don't see anything here that I would consider all too worrisome in regard to the uptrends. But next week I will be watching the comp just to see how that handles support. So anyway, as always, stay tuned to the blog for further updates.